Good morning, everyone, and welcome to the European crossover webinar. Let me turn down the volume a little bit here on the iPad. I always like to keep that one going at the same time. That way I can make sure that my screen isn't locked up or some kind of an issue. That being said, once again, welcome to the European crossover webinar. We broadcast 7 a.m. Daily for this 1 hour, covering all the majors, including the bonds, the bunds, gold. And let's go on and get started. Basically, an overview. We know that we have the big event coming up, or semi-big, because it's pretty much priced in, but it's going to be the FOMC that we have coming up on Wednesday. It's kind of dictated the movement of the market overall. Let's take a look where we stand, though, right now as we come into today as far as economic reports. There we go. Now, we did have German wholesale price index, and we do have Case-Shiller this morning in the U.S. at 9 a.m. Eastern. Along with that, we're going to have Richmond Fed Services, which is a lower tier. We also had, which yesterday we had at 10:30 a.m. Eastern, the Dallas Services Manufacturing Index. The day following has the Services Index, so that'll be at 10:30 a.m. Eastern. Relatively light calendar outside of the Case-Shiller, which isn't a big mover in and of itself. We'll go on further. As we roll into the next day, it'll be the New Zealand Business Confidence. And tomorrow we have Fed policy decision. The key thing has been they've been hawkish all the way, for quite some time. And the reason I'm saying this is because even, with all the issues that was going on with the trade tariffs, I would have thought this last time they may have, maybe eased back just a bit as far as rhetoric. And that's like, that's what I was thinking was going to go and happen. They might, gently ease back or, at least maybe make a notation that things are, maybe, moderating a bit, but they kept it full bore. And I guess for the most part, we might think we may see just the same thing. And that kept the euro under pressure yesterday. Although we know that when Draghi started speaking, there were some comments about normalization, and that really got the market going. We took off like a little bit of a rocket yesterday, and we'll go in and pull up the euro here. We came out of nowhere and just took off like a scalded dog, and we made it up in here. We had some resistance coming in. We actually, at the time, we had we'd already done our bias chart, and we had resistance. We talked about that key 1771, and the market had actually turned around and fell back from that area. But when we got Draghi talking, that got the market scooting, and we made that run up there. And let me take a look at something real quick. We got that run, and then we finally started going and pair back here in the euro. And my concern at the time was a couple of things. When Draghi starts talking, one of the things over the last few years, anytime the ECB mentions anything about even getting the slightest bit, forget hawkish, just maybe not as dovish, the market goes nutso. And one of the things I didn't want to do is I just simply didn't want to be in the way of Draghi. I was able to go and sell some on the way up and sell some right at the top essentially. But I ended up covering, and some of the guys in the room hung on a little bit longer. I think Blake may have he also sold some, but I ended up getting out, and then only to see the euro continue to go in and slide back. Now this morning we got another pop back up. And you're thinking, where the heck is this coming from now? And I saw Peter Pratt on the wires, and we'll go in and cover that story. He was talking about normalization. And that's what I'm saying is every time you get even a little bit of a inkling of any kind of a change, they just go gangbusters, So same thing, we saw the euro pop up. Now going into the FOMC, chances are the rhetoric's going to still stay, hawkish. I think the only difference is with the dollar index, I think it would take some very hawkish data, hawkish rhetoric, let me put it that way, to get us above this 95.50. That would actually turn everything around. I just don't necessarily see that, but we'll see. But, it's interesting to note that even though the FOMC is tomorrow, pretty much everybody expects what's going to go and happen. We're not seeing the, you would think that the dollar index, here we are at 94.17. I would think that going into the FOMC, you'd probably be somewhere up in here with the thought, okay, well, they're already bullish. How much more hawkish are they going to be? So we're still hanging around these lows. So my thinking would be that although I think the rhetoric would be hawkish, I think it would have to be ultra hawkish for us to really get going. So to me, I'm still going to respect this pattern that we came with, and it's bearish. So I still want to be a seller of any rallies in here. And going back to this on the 2-hour on the euro, to me, anytime you talk, like here was the euro. It was just, sucking wind at the time, sliding back. All of a sudden, Draghi just mentions a couple of comments of normalization and shoots up, takes off like a scalded dog. Okay. The only thing that kept this euro from not going higher was because we had the FOMC. Now we start sliding back. Okay, well, we have the FOMC. Nothing's going to happen. Peter Pratt comes on the wires, and here we go. Some more talk about normalization, and we get one of these, rallies again back in the euro. So to me, I think that going forward, then the talk will probably be, well, the ECB is now starting to turn around, and not that I think they are going to, but I tell you what, if the ECB was turning around in the year 2025, they'd still be saying, they're getting ready to turn around. So this market just seems like it wants to rally. It's being held back because of the FOMC, and at least that's my take. And I think it would take an extremely hawkish FOMC in order for this dollar to go in and reassert itself at this point. I don't think the dollar is going to heck in a handbasket, but I still think that there's a good chance we're going to come down here in this 92.80-ish area here eventually. So I think any rallies. But like I said, let the rhetoric come out, let them see what they say, and then we'll see where the market is. But it's still woefully weak if you look at it. I mean, we're just a day away from the FOMC, and we're still hanging not that far away from the lows, which seems rather odd considering how hawkish the FOMC, all the hikes they've already had, how hawkish they've been. There's still a couple more baked in the cake, and that might be the case because it's baked in the cake. The economic figures are still pretty good, very good, and yet still look, we're languishing near these lows. And that's why I believe that any rallies back will probably be an opportunity to go in and fade here on the dollar index. So let's go and take an overview of what we saw last evening as far as get us up to speed on what's going on before we jump into the bias chart. We saw the dollar CAD pick up just a little bit, not a whole lot, but a little bit. And it says here the dollar CAD slips as U.S.-China trade spat dims the global growth prospects. Every day it seems like it vacillates one way or the other. Either the market's not worried about it or it's about to start worrying about it again. So it says the Canadian dollar weakened against its U.S. counterpart. You can pin some of the weakness on the deteriorating situation between China and the U.S., says Ben Poirier, North American head FX strategist at CIBC. The United States and China imposed fresh tariffs on each other's goods as the world's biggest economy showed no signs of backing down from an increasingly bitter trade dispute. The price of oil, one of Canada's major exports, climbed after Saudi Arabia and Russia ruled out any immediate increase in production dispute, despite calls by President Trump. If anything, you would have thought they would have done just the opposite, and that's exactly what happened. I mean, and I'm just talking about reality. I'm not talking politics. With the way he's gone on with the rest of the globe, and I know he was saying they need to bring it down now. Well, they were definitely going to go on and not respond to anything he said. And if anything, do the opposite. And that's why prices are even higher now. And you see that run up here in crude oil. So that's not a surprise whatsoever. Still, speculators have raised bearish bets on the Canadian dollar for the third straight week, data from the CFT states. So let's go and move on. And the Australian New Zealand dollars ease. Fed offers a distraction from trade. The Australian New Zealand dollars edged lower on Tuesday as investors look past the Sino-U.S. trade dispute to ponder what surprises the Federal Reserve might spring at its coming policy meeting. The Fed path points to reaching neutral, 2.5% to 3% by mid-2019, said Gavin Friend, senior market strategist NAB. He noted U.S. Treasuries had already priced in a more hawkish outcome with short-term yields at decades highs. And boy, can you believe this? Look at these bonds. They are really, and we talked about this is still a key area. So, we're just below a point, but this is still a very key area here. But look at the bonds on their lows. Look at this. We talked about this last week. Dude, where's my bond rally from the Nadi's movie? Dude, where's my car? Dude, where's my dollar rally? I mean, look at the dollar. It's not that far from the lows. And we've got U.S. yields just going higher and higher and higher. Hence why I think that the dollar is more of a fade after the FOMC decision. Most would expect hawkish rhetoric, but I think we'd have to be ultra hawkish in order for the dollar to do anything. So my take would be any rallies on here would be a fade. We would, just going with technicals. To me, I wouldn't believe this dollar rally until it got above 95.50 on a daily close. And you're talking about 140 pips at this point, or 115 pips, ticks, that is. That suggestion, there was a chance that yields would retreat if the Fed sounded less than hawkish, offering an excuse to sell U.S. dollars. The dollar has weakened despite higher yields and strong growth metrics, which may suggest a shift in foreign investor appetites, added Friend. We've been talking about that for the last week. Germany's 10-year bond also climbed to its high since mid-June after the ECB Mario Draghi highlighted a relatively vigorous pickup in inflation and noted building wage pressures. Once again, that's suggestive of, maybe they may start to wind down. Maybe there's a little bit more momentum rolling that way. And that's what I'm saying is it doesn't take, if there's even a whisper of that, you see this, if there's even a whisper, you see the euro take off like crazy. You see, so it wants to rally. This morning, here we are sucking wind at 17:30. Peter Pratt goes on the wires. He's talking about normalization, and the market just goes and shoots up, despite being right there in the face of the FOMC tomorrow. So that's what I'm saying. This market wants to rally, and dollars seem like they can't rally no matter how high U.S. rates go. We thought the New Zealand dollar would be a little bit more positive momentum here as trade faded into the background, at least for now, but the failure to break above 67 cents suggests the path higher is going to meet some decent resistance. So let's go and move on so we can quickly get on to the bias chart. The euro struggles despite Draghi's inflation comments. The euro struggled on Tuesday despite the ECB President Mario Draghi's comments about relatively vigorous inflation in the previous session, while the dollar paused before the U.S. Federal Reserve policy meeting. Analysts had largely interpreted Draghi's speech as hawkish. Eurozone money markets brought forward their expectations for a 10 basis point ECB rate hike. Here's the U.S., hike after hike after hike after hike after hike. And look, just the hint of a 10 basis point, not even a quarter point hike, is enough to send the euro from yesterday just screaming higher. And the only reason it didn't scream much higher is because we have FOMC. But it just tells you that I think it would have to take an incredibly hawkish FOMC to get this dollar to rally back and hold that rally. There's a general lack of impulses. The market's not reacting to the trade war because we're not seeing any economic impact. The other big driver is usually monetary policy, but the FOMC is going to be a non-event, said Lan Wen, currency strategist at Commerce Bank. The dollar remains the absolute go-to currency when there's any question about risk or stability or these geopolitical situations, said Barack Wakabayashi, Tokyo branch manager. The minutes showed a few of the Bank of Japan's board members said the central bank must consider more seriously the potential dangers of the ultra-easy policy, such as a negative impact on the country's banking system. That being said, the dollar yen is holding its own up here. We had a resistance at 1284, but it's still hanging there, and we'll move on. Let's go on and get with the ECB, and this is what we're talking about this morning. So if you're looking at it and thinking, wow, what the heck happened? Euro was right here at the lows, and we got a little bit of a good little rally here. Well, once again, if any ECB member even whispers about normalization or whispers about inflation, the euro gets its big-time rally boots going on. So it says the ECB is not planning to speed up normalization. The Eurozone economy remains on course for the ECB to cut stimulus by one more step at the end of the year, but normalization will not be any quicker than projected in June, ECB chief economist Peter Pratt said on Tuesday. Playing down the market speculation that a recent comment by Draghi foreshadowed quicker normalization, there's nothing new, Pratt told a conference referring to Draghi's speech. Clearly, we see progress in underlying prices. What is behind the inflationary process? But it's a long process and conditional on very easy monetary conditions. But Pratt dismissed the idea that there was a message in the choice of words and argued that the market reaction was unwarranted. He even argued that recent market pricing, which put the bank's rate increase for some time in the fourth quarter of 2019, were broadly in line with the ECB's governing council's own scenario. The ECB expects its 2.6 trillion euro bond purchase scheme to end at the close of the year. It expects interest rates to remain steady at record lows through the summer of 2019. Comments also appear to reject the recent argument by Austrian central bank Ewald Novotny that the ECB would speed up any policy tightening. Pratt said that the biggest risk to the outlook is a growth accident or an unexpected drop in the bloc's expansion, which could dampen the inflation outlook. And lastly, with gold. Gold steady as investors await the U.S. Fed move. Gold is glued to the $1,200 seesaw levels with some short positions closing in just in case the Fed does something unexpected. A dovish inference could send gold prices above the 1210 area. There's a lot of cross interference for this week's forward guidance from the Fed meeting. Gold has fallen more than 12% since hitting a peak in April. China and the U.S. imposed new round of tariffs. If the lingering trade wars fears of renewed emerging market jitters, sour sentiment, a U.S. dollar may reclaim a haven bid, making gold vulnerable. Gold is making a strong base between 11.95 and 12.05. Doesn't look like we'll break the support range, said Vandana Bharti with commodity researchers SMC. The Fed will meet, will limit upside or stimulate some correction in the first half of the week. In the second half, we can see some level buying in gold across the board, and silver should match in step. So let's go and move this out of the way. And let's go and move into the bias chart. So we had 1771 as our resistance. This is right where the market started turning back. I think we got up to maybe 74 or 5, and then we, started sliding back. And I got into what was in the mid 40s or so, lower 40s, before Draghi started talking about the vigorous inflation or slightly vigorous inflation, and the market just went bananas there for a while before sliding back. And like I said, Peter Pratt had some comments. We saw the story there, and the market turned around and took off again. So let's go and take a look at where we are with the euro. It may be a relatively quiet session ahead of FOMC. The key thing here, one of the things that we talked about was whether or not the market was going to be able to get above 1771 right here. And we did get that close, and then we started to slide back. And right now, I think we're just going to be treading water until we get past the FOMC. But my take, like I said, I think it's going to take a very hawkish FOMC. And not that I don't think the rhetoric will be hawkish, but it's going to take a very hawkish FOMC to get the dollar back on the bid and send the euro much lower. So for right now, The support's going to be the 1707. I don't see anything changing. Then a break here, I think will be we'll find buyers there at 1707. So nothing changes there, and then resistance on a very short-term basis is going to be right here, 1794. That's what it would take to get this market chugging back to the upside, 1794. We did run out of gas yesterday. We were talking in the chat room, which was right there at that 1815 area. And so right here, right there, 1815. And I think, like I told you, when I redid some maintenance work on my computer, for whatever reason, a lot of these lines, my levels didn't even save, and that was frustrating because I found myself doing a lot of work all over again. But it was 1815 that we talked about in the chat room. I think it made right to that price of 15.5, maybe 16 for it started to slide back. But we're looking at these touches coming across the board. But here's where the market could potentially get to. Is up here at 1838. And we'll pull this further back. The reason I'm looking at that 1838 is once we get past the FOMC, if we do see a rally, this is where I think they'll make it to. And actually, as I told you, some of the work I didn't get saved, but there's also 161% things from here to here that comes in like around 1860 or so. We'll just do a quick fib. Once again, like I mentioned, when I did that maintenance, it didn't save any of my charts, and that was really frustrating. So I'm having to do a lot of my work all over again. But you can see here, there's 161% of this recent move here. Now, so let's go in and go with 1794. Once again, if we get a bullish or hawkish FOMC, that would not be a surprise. That's what we would already expect. But a break in here is probably going to take us as low. We may take out 17, maybe. Probably right in here is going to be real good value buying all the way down to 1690-ish right there. But once again, like I said, I think the market already has that priced in. I thought last FOMC we might have seen the group, ratchet down a little bit of the rhetoric, but they were still on, still going full bore ahead. And so I really don't see anything, although, we're coming along. You would think they may take a pause, but we'll see how that plays out. But I think this year just wants to move higher. You can feel it. I mean, it just doesn't want to come down. It'll slide down. We certainly slid down yesterday, and I didn't want to stand in the way of Draghi. If he started talking, once again, I think overall, you see here, we're starting to continue to move higher. I think this market still, you can see it. You can feel how each pullback reminds me, it's not the same thing. You know how the cables bend. Each pullback, they buy them and set them up higher. Each one, well, this one, it's not quite the same thing, but each pullback, you can essentially say they consolidate and then they start to push back higher. So this market looks like barring a super hawkish Fed, it looks like it wants to rally once we get past FOMC, but we'll see. So let's get enough of that. Let's go on and move into the cable. Same thing here. A lot of the lines that I had got all messed up. So where is resistance coming in? Yesterday we had 3162, and I think the market made it up to 3168. There we go. And resistance. We'll just move just up a little bit higher, 31.68, but I would be a little bit concerned. We'll just see. I mean, this is where they ran out of gas, and this was our level, but we had it 31.62 yesterday. You know, even with this pullback here, this market holds up very, very well. We'll go right here with just the technicals. That's going to be 31.68. Nothing's really changed here on the cable. Still looking very good, even though it looked pretty woeful on Friday. And you would have thought maybe they might have even, although we know this 30.56, that's why we have it in crimson. It's our pivot, our bias pivot, and we know how key that 30.56 has been all along. But it didn't even try and take that out coming into the Sunday session. And we saw strength yesterday, a bit of a fade. And here we are back up here challenging support then. And we had, I don't see actually any reason to change that. We had our support, remember yesterday, 30.87. And the market dipped as low as 30.95. So about what, 8 pips above our support that found that. So we're going to stick with that 30.87 here. I think the market may be treading water until we get past this FOMC. Let's go and move in now to the Aussie dollar. The Aussie dollar's held up relatively well, but it's been very, very quiet. I mean, you would think this is a 15-minute chart, and it's actually a 2-hour chart, and we just gently paired back in very, very tight ranges. Look at this. This is just unbelievable how this is a 2-hour bar. And look at this. Some of these are maybe, what, 8 or 10 pips for the entire range of a 2-hour bar on this one right here. If the dollar, we do see this dollar slide back, this is where we're going to go to. The 73.20, we have that already marked off here, 73.20. And we had our resistance, or our support, I should say, at 72.19. And we'll allow for that. So I think the 72.19, any pullbacks here are going to be supported. I think there'll be an opportunity for anyone that's short the market to come in and look to go in and cover towards the 72.20. So I don't see any changes here with the odd at all. As I mentioned, I think we'll be treading water until FOMC. We may see a little bit of movement here in the euro and cable, but for the odd, probably relatively quiet. We just see, look at the euro just now, just jumped up to 17.85. And that's what I'm talking about. We'll jump into that real quick. You see here, we're popping up even higher. And look at the dollar. Here we are after the Fed hikes and hikes and hikes and hikes. And look, we're over here hugging near the lows. And that's what I'm saying is you can feel it. The euro just wants to move higher. And look at this. Moving into the Kiwi. Starting to gently slide back. And same thing here. I don't see any changes. We have 66.14 for our support here for the Kiwi. I don't see anything really. And then here comes a 14 running here. So coming in right there for support. Market just basically treading water. We came right here to this level. At the 66.36, you can see the market just kind of hanging around that support. But we're going to stay with the same thing. We had 67.05, 66.14. I don't see any changes here for the Kiwi. I do expect to see some good movement once we get past FOMC. And with that, we'll move into the dollar CAD. Now with the FOMC, I think we can punch up a little bit higher. And this is, I think, we're looking right there for our resistance. 30.15 that we had from yesterday. Same thing here. I don't see any real reason to go on and change that. So if we get a the FOMC plays to the same tune of being relatively hawkish, that'll probably allow the dollar CAD to move up here. But I think this will probably be viewed as a nice selling opportunity all the way up here to 30.40. So tomorrow we may push our resistance a little bit higher. But for right now, it's just going to be this 30.15. No changes from yesterday. You can see here the market's been trading relatively quiet. And support we had here at 29.15 and coming in right there. Same thing, no changes. I don't see anything to change here on the dollar CAD either, just the same as it was for the Aussie and the Kiwi. The only thing I will note here in the dollar Swiss is that we do have nice little hammer, mini hammer bottom right here. And we've seen some follow through on that. Let's go and take a look where we stand here on the 2-hour chart. And as I mentioned, this is frustrating because the work I did was not saved. So basically starting all over again. And so now that's why you're seeing all these lines all over the place. Despite the work I had for the week, it's all gone. So let's see where we stand here in the fib. We seem to be stalling just a little bit here at this 23%, and we had the 96.53. I believe that was our resistance here. Let's take a look. Actually, 96.27. So we've had a nice run up here in the dollar Swiss. Yeah, we had 27 there. Look, we've had a pretty good little run up here. I would like this 53 level. When we look as far as resistance for the day, and the market is very oversold, we'll go on and give it right here, just above there. See it right there? 96.76. Market trying to put in a short-term bottom here. We even had a nice little mini hammer even here, right here on the 2-hour. Not to mention the same mini hammer that we had here on the daily chart. After the fall that we've seen here in the dollar Swiss, and the most recent fall really came with a bit of force here. So I think the market is overdone. I think they'll use those opportunities going in and buy this market back. We'll have to see how we react after FOMC, but at least for now, support's going to be right there. 96.13. 96.13 here on the dollar Swiss. And let's go and move on now to the dollar yen. We're gently pairing back from that 1284 that we had yesterday. But this market is really hung tight up in here. You know, you see, when you take a look where U.S. rates are right now, this dollar yen should be closer to 114, if not trying to make a trek towards 115. I mean, look how low these bond futures have gone, and U.S. rates have shot up. And although the dollar yen's hanging around here, to me, it seems like I don't even get it. How can you not be higher here? So if you look, this is in July. Okay, so July. So let's take a look at the bond futures and where they were in July. So we were trading at 143. So we're 4 full points lower. Yet the dollar yen's even lower than it was in July. And the bond futures are 4 full points lower. You would think that this would be, you know, like I said, probably really about right around maybe 14, 17. So, I don't mean 14, I meant 1370, like 1370 up in here at the very least, if not just above 114. So we'll see what happens. But I mean, once again, it doesn't appear to be making the most of its rally. This one might be rather susceptible if we do see a dollar pair back, especially if bonds start to go and move. This is one to go and keep an eye on. Certainly not a short at this time at all, but one to keep an eye on once we get past FOMC and you see the dollar reaction and you see bond futures reaction. The bond futures are pricing in everything but the kitchen sink on this move. And we know that this 40-20-ish area here is very key level going all the way back to 2009. So, but when you're looking at something going back for multiple years, if you overshoot it by a point, that's probably within reason. What I'm saying is if we get a rally or if the Fed doesn't appear, these bonds could go screaming right back. And it wouldn't even change the complexion of anything. You could easily scream back probably 2.5 points, easily, if not maybe 3. But it's something going to keep an eye on because, like I mentioned, they've priced in everything but the kitchen sink in these bond futures. So where we are with the dollar yen, well, the dollar yen is still bullish. I'm still going to stay with this 1284 right there. It did get above it, but we've now slid back below it. And I'm going to stay with that 1284 for resistance here on the dollar yen. Now, as far as support, right there. For right now, on a short-term basis, 1242. It'll be much lower going into FOMC, but we'll go with 1242 for today. Probably revert it back to this 1211 tomorrow. So let's go into the cash dollar index. We had a resistance at 94.68. It hasn't even come that close to 68. And hence, look at the euro, still pushing higher here. Look at that, 1788, not too far away from our 94. That's what I'm talking about. You've got this Fed, hawkish as all get out. Nothing's changed. As I mentioned, last Fed meeting, I thought they were going to maybe ease back a little bit on the accelerator, and they kept it trumped all the way down. So with everything going, everybody expects a hawkish Fed, and still the dollar can't pick itself up. There's something woefully wrong with this dollar. And it has the benefit of higher rates. Still no effect. Trump and China going back and forth with the trade tariffs. Still no effect. So as I mentioned, to me, I think it's a fade on any rally going to the FOMC. That may not seem like that's saying a lot now, but I'm saying is that's how I see it. To me, I would not be bullish on the dollar unless it closed on a daily close above 95.52. That's what it would take for me to be bullish the dollar. And that's not even an opinion. That's just the technicals right there. This market would have to claim 95.52 on a daily close in order to turn this thing bullish. It's not bullish. That's not a bullish trend. You can look way back and say it's bullish, but this is not a bullish market. And it's not even responding bullishly to fundamentals such as higher U.S. rates, which you can see here. Not responding at all whatsoever. Not responding to the tariff news. No response there. And not responding to a rather hawkish Fed with a meeting tomorrow with an expected, although priced-in rate hike, but the rhetoric's been nothing short of hawkish all along, and still it can't pick itself up. So this is our resistance. For today, I'll keep this here, but at this point, it certainly looks like this market would even have a tough time even getting beyond 41. You see right here? Actually, we're going to move it down there. So we'll call it 94.41. This is at next level, but it just keeps on moving lower. So any moves to 94.41 for today. We'll see where we move things tomorrow. The euro just got up to 17.90 and it slid back 6 pips. Remember, our resistance is 17.94. Support here on the cash dollar index. We talked about this yesterday. That's our area. If we break lower, we tried to hold. I think that's the next area for them to go to, but I don't see them going to 93.46 today. The only thing I think we can go with is that same intermediate level we had before, which was 93.72. So we'll tighten it up a bit. Seems odd to think about the dollar going lower, going right into the teeth of the FOMC. And we'll move into the gold market. Now, we had a resistance here at 12.11 yesterday. We see the market ran out of gas at 12.09 or 12.08.90. And someone was asking about this yesterday. They said, whoa, look at gold. And I said, hey, look, nothing's going to change on gold. And that I was telling them, I go, that's why I put because I said, look, there's that area here, that 12.08, but that's why I put the resistance at 12.11, because you can make it all the way. We talked about this yesterday, remember? We were down here at, what was it, 03? And I said, you can come here to 12.08 and it doesn't change anything with gold, because we talked about how it's been up and down. We can slide right back down. And that's exactly what happened here. So I said it would take a close at 12.11. And we even showed it. There's our 12.11 right there. You see there, the touches? I would take right there. You see that? And I said it would take that because that way it would be able to reclaim this trend line. And you see here how we came up here at 12.08 and we quickly just went right below that trend line again. So I said, if we got a 2-hour close above 12.11 right here, that would reclaim this trend line and there'd be enough distance to say, wow, it's back in play now. But that's what's arguing, is that a move to 12.08 didn't change anything. It was still going to keep its relatively weak structure. And that's what it's doing right now. This has been invalidated in my eyes. The reason I want to keep it there is just to reinforce that it's really having a tough time. Because one of the things that we talked about, or I did on the analysis for ForexAnalytix, which was Sunday coming into this week, I said, hey, it's going to be with and we mentioned that yesterday on a defensive tone, meaning rallies are going to be questioned. Okay, and so this just reinforces that we've broken it. We got above it, and here we are struggling again with that. And we're just hanging around here only because the dollar's lower at this point. So resistance is still going to be the same, 1211. Support, nothing changes. It's going to be this horizontal level, 1197. So we may be treading water. The only thing that, and it mentioned in the same thing in the story, was that if we get a surprise out of the Fed, let's say they ease back a little bit off the accelerator, that could get gold, moving. But it's mired in this range that we talked about, just going back and forth, back and forth. And that's one of the things we talked about yesterday, and why our resistance was up there at 1211, because it would take a 2-hour close above 1211 to really reclaim this trend line and try to get things on the positive. We did make it up to 0890, basically 1209, not at the 1211. And here we went and started to slide right back down again. So it's going to be 1197, 1211. That's going to stay the same. And now we go to the bonds. These bonds are just continue to stay in a world of hurt. No matter how low you put the support, when we looked at that, it stays just as weak. The only thing we look at is just put it to today's lows right here. And it's pricing in, as I mentioned, it's pricing in everything but the kitchen sink ahead of the FOMC. The only thing you can see right here is right there on the day's low is going to be 39.17. It seems odd that, like I said, the bonds continue to move lower, obviously have an inverse relationship, so higher in yields, yet no matter how much the bonds move lower, it provides no real support for the dollar. The dollar just can't get any oomph off of these higher yields. Now, as far as resistance here in the bonds, it's just honestly just plain technicals right now until we get past FOMC. And right there, 140 even, 140 even. And we're well ahead of time for right now. But we've got the bunds here. They continue to languish near their lows themselves. And right there, 57.87. And this market has really changed from bearish to bullish to bearish to bullish to bearish to bullish to bearish, back to bearish. This market changes rather quickly, but it's going to be 57.87 at this point. Resistance would be right there at 58.08. 58.08 here on the buns. The most recent high right now just came back in at 58.03. So it'll be 58.08. Well, we had 12.396 and 12.312 as our support. The market came down to 12.305, and we had 12.312. And we had 396, and we just came up to 12.404. Let's go and move this now to a 30-minute. Now, this is a long-legged doji, which would suggest a pair back here. Market, a long-legged doji, bears don't have control, bulls don't have control. You finish in the middle, and usually you see a pullback from what the most recent run was. Well, the most recent run obviously is up to the upside. So we would expect a likely pullback. That pullback comes in right here. For starters, be 12.350, but we'll move the support a little bit lower right here. 12, right there. 12.341. 12.341. That's a very, very, very tight support here. Let's take a look at this, the run that we've already had. If you're scalping it, 12.341, but we came back right, look at that, to the 23%. And we had our resistance, supported 12.312 yesterday. We're actually going to move it right here. Initially, you got 12.341, but we'll put here to 12.326 for today's bias chart support. Right there for support resistance. It's going to be 12.412. 12.412. I think we'll be in a relatively tight range till we get past FOMC. So it'll be 12.412. So there's the bias chart support levels for today. We finished early, and we'll take a quick overview here. The euro continues to hold up very, very well. As I mentioned, we were under some pressure coming from Friday as the cable ran to some bit of a downdraft, which I thought the euro was prepared to even go higher on Friday. But when the cable came into that extreme pressure, that weighed on the euro, kept on the defensive as we came into Monday and looked like we were trying to work lower. And then Draghi got to talking, mentioned about the inflation, and man, the euro shot up like a rocket. We began to go and fade from here and continue to go on and fade back. And here comes Peter Pratt, and he starts talking, and the euro takes off again. So to me, it just feels like this market really wants to go higher. Once we get past this FOMC, doesn't feel like there's anything that's going to hold it back. The only thing I see holding it back is if the FOMC goes from hawkish to extreme maniacally imposed hawkishness. That's the only thing that I can see that's going to push this dollar higher at this point. it doesn't want to respond to anything at this point. So that's about the only thing. If I thought there was even a chance we might even have pushed even a little bit higher yesterday, although I shorted it, I actually covered well before it even moved a whole lot lower, because I've been in the way of when Draghi speaks, and I've been run over before, and I wasn't interested in getting run over. But we continue to move lower, and like I said, now Peter Pratt got on the wires this morning. That sent the euro right back up again. So to me, it looks like this market is going to be well supported on any pullbacks. And the thought being, you know what, it's a little bit, like I said, the Fed keeps on raising and raising and raising. And here's the ECB talking about maybe even the thoughts, a 10 basis point hike in the third quarter of 2019 is enough to send the euro running like crazy. So, like I said, you kind of look at the things that don't seem to make sense, but you got to go with how the market plays it. Going here at the cable holding up very well, which it has been doing even after Friday. I thought we might have even seen a little bit more downside action where they may have tested this in the Sunday session, but the market held up. I mean, this 30.56 is where they went to. We talked about this in the chat room, and that's where they went to, that 30.56 eventually. They were hanging around the 30.80, 30.70, and finally they made it down to 30.56, and that held. But here we are trying to push higher again. We have our resistance here. We actually marked that off as 31.68, but this market sure acts like it wants to try and move higher, but we are at a key level here at the 31.68. Going back to the dollar index, to me, it's just bearish. I think unless we get a crazy hawkish Fed, I don't see where this market can turn around at this point. Just going with the technicals, we needed, at least in my eyes, you need a daily close. You need to close above 95.52 in order for this market to get back to bullish, a bullish bent. Anything other than that, if you're looking just straight up technicals, you can't argue that this thing is not a sell on as a fade on any rallies back. It has not done anything to prove itself at this point. Gold just being moving back and forth in this range. I shared that basically moving in this range capsulated, if you want to call it, up on the upper band of 1216. But you can see it's just up and down, up and down, up and down, up and down. And it would take a 2-hour close above 1211, which we didn't get yesterday, to go and grab a little bit more of the bullish momentum. Right now, it's a defensive posture. And the dollar CAD trading relatively quiet here. Not a whole lot of action. Seeing the same thing here with the Aussie. Here's the Kiwi. Next target up here for the Aussie dollar is going to be the 73.20. And we may see this dollar start to garner a little bit more momentum to the downside once we get past FOMC. As I mentioned here with the 30-year bonds, pricing and everything but the kitchen sink, but it has not been beneficial for the dollar. And the dollar yen, we're keeping our 1284, still bullish, but it sure seems like it should be a heck of a lot more bullish in light of where U.S. rates are. So you have to wonder what's going to happen if we see these U.S. rates pop back and the dollar starts to slide. With that, we should have Dale up. And thanks for joining us here on the European Crossover webinar.
Great analysis, Paulie.
Oh, thanks. Thank you very much, Dale.
I listen to you, and you bring up areas that that I agree with, so that makes you great. I mean, actually, it gives me more conviction about the importance of those inflection points that you're bringing them up. In fact, before you leave, I just have one laugh for you, okay? Before you go, let me just share my screen here. And it's one of those, I've heard a lot of ridiculous commentary on CNBC over the decades, but this has got to be the most. Let's see. Which one's me? Which Dale Pinkert? I'd say this one's me. Oh, it keeps moving around. Anyway, let me try this. I'll make myself presenter. Okay. So, the market was down yesterday, Paulie, because of everyone worried about tariffs, except NASDAQ, which had been the relative weakness. And I heard a commentator on CNBC say that people were buying FANG stocks as a flight to safety. What do you think, huh? I mean, have you ever, a flight to safety, obviously this anchor was not around when things like T-bills and TED spreads and bonds and gold were kind of flight to safety. Now it just shows you how, that people can't be out of stocks, that they'll rotate from one sector to another. But yesterday, the flight to quality were FANG stocks. So, I can't argue with them. They had a great day, and but I can say this: if we take out yesterday's low in NASDAQ 100, there's a lot of vulnerability in the air underneath. So I thought you'd get a kick out of that, because I know every time. Yeah, go ahead.
I was going to say these equities have held up like a champ. I mean, we're actually going towards the end of September. Sometimes we start to see the weakness, come in. We had a very good August come into September, and these equities are just holding up. Yeah. So
it's fought every seasonal, huh, buddy?
But yeah, you would think seasonally you'd probably see a bit of a pare back, but it's still holding up like a champ.
And I just thought that you would be able to relate, because I know you and I, every time we're worried about risk, we'll buy, I don't know, Netflix or Amazon or, Facebook, just to make sure that, if there's anything systemic out there, we're in something safe like Facebook.
Mm-hmm.
Right,
I don't
buddy?
do too much. Yeah, I will say I don't do too much with equities at all, but I see the take on that. But to me, the thing and it hasn't phased the market is these rates. I got to give the market. I got to give equities props. They have just looked the other way despite rising rates. When you look at the either 30-year bond or 10-year futures, it's just they're just completely oblivious to what's happening in the rates market, and that's just reality. How we see it. Although I think there's a problem with the dollar. I mean, the dollar has everything going for it, and it still can't rally, up any higher, with tomorrow being FOMC. So to me, the dollar's a fade on any kind of rally. Matter of fact, I'm upset with myself for not picking. I saw the euro near those lows late in the Asian session, and I thought about picking up and say, well, it might as well just wait till I get past FOMC. But just goes to show you, this dollar is not going to rally. It's just not going to. To me, barring a 95 close above 95.52 on the dollar, to me, it's a sell on any type of rally.
Maybe it happens. In fact, I was going to start off with that. People that follow my work I look for 3 drive formations, and yesterday this spike candle that we had on the hourly did not confirm and gave it up pretty quick. So I'm thinking if we get a third drive actually after the Fed, and I guess the key statement for the Fed tomorrow is whether or not they keep the word accommodative in or not. So it's not what they're going to do, it's what they say, and everyone's focused on that one word. So I hope they accommodate you and everyone else in our community to get the trades off they want to get off.
There you
So,
go.
So thanks a lot, Paulie.
Well, you have a great day.
It's a great way for me to get started. Used to come in cold, and now I could listen to you and kind of get a feel for what's going on before I take over the microphone. So good hunting to you today, buddy.
You too. Have a good one.
Okay, how are all my face warriors doing today? Put on your war face. And before we get started, guys, you know, there's only about 4 days left to get these deals. Okay. Even if you just want to, you know, really be conservative, you could try the, you know, 2 months for the price of one. Although this is your best value here, go for a year. You know, I have a philosophy that a lot of people really don't give services, money managers, even mentors enough time to really prove whether or not they're going to add value to what you're trying to accomplish as a trader. I really think anything less than a quarter, which is still pretty short term, is really the minimum that you can make a decent judgment on whether you have something or not. And if you're experienced, you know in a day whether you have something or not, because you've been around and you've seen the whole spectrum from, you know, garbage to things that could really, you know, help you in the market, point your eye towards opportunities. So go ahead and click the button and get signed up. This is the once a year deal. I know we do other promos, but this is our best value deal, and it only happens once a year. Also, you know, if you're not happy with your broker, or you'd like to also have another account going to, you know, you really never know what you have until you know, if you have a good racehorse, you don't know if it's a good racehorse until you run it against another one. You could set up another account, get a hold of the guys at Forest Park FX, and tell them about, you know, what kind of size you do and what kind of spreads you're paying. And if you feel comfortable, obviously, the number one rule, as Justin said, is a return of capital. So be very careful if you're with one of these unregulated brokers, and if you are going to trade there because they accept you as a U.S. citizen, where most don't outside of the country, keep your balances pretty low. Yeah, windfalls, you pull it. Okay, so similar to what I'm hearing a lot of people in crypto doing. You know, they don't sit with big balances on Binance or I don't know, what is it, MexBit or whatever. We have a great guest today. I met Vladi on Twitter, and you're going to want to stick around for it because he has a nice little ebook and has a method that he'll be presenting called the HFV method. I'm not sure if you're familiar with it. And looking forward to speaking to Vladi. It's my first interview I've had with him. So let me just touch upon a couple of things in the market. As I was saying with Paulie, here's one, here's two. You know, if we push up here towards 1820 and I get some type of reversal candle after the Fed may attempt shorts here, and I'm with Paulie, and I do think that the dollar has some more weakness in it. I actually think that we're going to see a 119 handle, maybe even a 120 handle before this is over. But we could go to 118 and then pull back towards 116 before that happens. You know, just enough to shake out a lot of people. Although I was reading Jim Walsh last night, and I'll ask the guys. Jim is saying that the setup on COT is still showing way too many dollar bulls. So that's another piece of evidence that says you should be looking for a lower dollar. Yesterday, Steve and I were talking about EG. We both didn't think it was a one-day wonder. And while we were talking, we were 38% back, and it popped pretty good off the 38% that was here. And we continue to pull back here. This is your daily. So I would just say, based upon this measurement, this is something I'm going to be interested. If the Fed sets up the opportunity for me to buy it, here's your range. Let's call it 89.35, 95. So 60 from 40 is going to give you right around 61.8 back around the 89 level. Between 89.20 and 89, I would probe it wrong over the low of the move. You also have the 50-day moving average coming in here around 89. So there's a couple of things. I think the daily must have been the 1 hour where you have a convergence of the two moving averages. I don't know where I saw it. Anyway, I still like it. I think last week was important, and you got a kind of an idea of how these fib levels. You got one good reaction off it, only lasted for a candle, but now it looks like maybe we're going to get A, B, C down here. So I'd be looking for something here. Also, I've been thinking about the gold quite a bit, and I'm wondering, with a weak dollar, what's taking it so long? I know we have some upside here today, 250. But when I look at this daily here, this is not much of a, it almost looks like there's distribution going on here. So I see two scenarios. Either we clean out this low here at 1180 and then turn up again. But, my RSI work keeps me a little skeptical of the gold because of why. We have the confirm low here at the bottom. Okay, so markets generally don't give you tremendous rallies when price and momentum are confirming at the same level. So I may, give it a shot on a break if we, take it down here. But it almost looks like gold is still a short. We're not getting. We do have divergence in silver, but because we've had other lows. Okay, this was the low in gold, which hasn't been taken out. Whereas silver has taken out those lows. And as you can see, momentum is no longer confirming. So silver looks a little further along in the technical process, because if you look at the two, you have one not confirming new lows and you have one that still has a confirmed low. So that's my take on a few of the markets that I'm paying attention to. And let me turn it over to Blake and see what he's thinking with a day away from the Fed. And how are you? How are you, buddy?
Hey, good. You were mentioning how you were buying Netflix because of potential risk aversion. I bought Litecoin. I actually moved 95% of my portfolio into Litecoin. So that's
just
for safety.
Safety. It's amazing what people think is safe nowadays, isn't it? Compared to our earlier days.
Right. No, I got the joke. I think that one went over Paulie's head. He wasn't. I don't know if he really was thinking about what you were. He doesn't get your humor sometimes. So I was getting it, but I let him finish up his thought. He is correct, though. I mean, stocks have been extremely resilient, and obviously, and to buy FANG for safety reasons, that's a head scratcher.
When I heard it, I had to, did I really hear that? Yeah. Anyway, I knew you guys would think it was funny.
I did. I thought it was. I think you're a funny guy. So there's a interesting chart, and it was passed around like a few months ago, like sometime maybe beginning of summer, and I found it was really interesting. Like the FANG stocks represent out of the S&P 500. The FANG stocks market cap is equivalent to the lower, like 2/3 of the S&P. something crazy like that, like literally four companies, 4 or 5 companies. I think it was the original FANG, not all 5, but it doesn't really matter, right? Like you take 4 or 5 stocks and they're equivalent of 280, I think it was like 280 S&P stocks, market cap wise.
Concentrated.
Yeah, kind of. You think?
Yeah.
It's like orange juice on steroids. It's it's crazy. What's the most crazy thing about that is if those stocks do see some sort of decline, it will take the entire market down, and that's the scariest thing. So I'm buying Litecoin.
I like Litecoin too, because less calories.
And I'm buying Doggy Coin too. Doggy.
But Blake, I was kind of thinking about. I read something about the corporate debt market, and part of this bull market in equities has been financial engineering. Quite a bit of it, in fact. These public corporations going to the debt market. Very generous, low rates, taking in money, but it's not like they're building new plants or anything. They're paying out dividends. They're doing a lot of share buybacks. So I was kind of thinking, what would be the worst thing that could happen is actually, since they're buying back their shares with debt, they're buying their shares on margin. So it would almost exacerbate the whole situation if rates started going up and the asset that they used the borrowed money to buy started depreciating in value. It would be like a double whammy, and it would be like that could really accelerate a decline, because basically they margined all the money. Corporate debt has gone into their own stock.
It'll put a lot of these cash rich companies into a cash poor position, right? So
right.
I mean, it could be
watch that corporate debt market.
It's just it's definitely a slow moving train wreck, I think, and you gotta have ears up, and
could be a year away, could be 2 years.
It's not. The fact of the matter is, right now everybody's chasing yield still. Every asset manager out there is trying to do it, because Trudeau's speaking. Just FYI, he's speaking at Council on Foreign Relations event in New York.
There's a lot of action at the UN and stuff.
But one of the reasons why I'm watching that is just because I'm pretty long the dollar CAD right now. And I picked it up on Friday. This support, I think we might even still have the charts here from ForexAnalytix from on Friday. Let me go back, and I think the 4-hour chart, is still here from Friday, and the analysis from Friday I believe is still down there. But criticals, horizontal support, all the this is from the 20th September, so you can see all the analysis. Anyway, I've built a pretty big long position here in the Canadian. I sold a quarter of it here at 129.60 last night. I mean, we haven't done a whole lot overnight. We've been pretty much sitting here for the last 12 hours, whatever. But I really like the prospects of a higher dollar Canadian. I was just reading an article in Politico about, probably the best thing for Canada to do is just, not do anything, and just, because remember, you got midterm elections coming up. In order for Trump to leave NAFTA, it's got to go in front of Congress. And if Congress, by the time it does that, it's going to be next, his second half of his term. And if Congress is controlled by Democrats, then, it's probably going to get shot down. And so if Trudeau wants to just kind of, wait it out, it might be the smartest case for Canada. There was also, I think JP Morgan forecasts the dollar Canadian without NAFTA would trade at 145. Now, I think that's a far cry, and a lot would have to happen for NAFTA to completely, like the NAFTA agreement, to completely fall apart. You'd have to have Donald Trump moving away from NAFTA, trying to do a bilateral agreement with Mexico. Then it'd have to go through Congress and actually get approved. And that process, I mean, I think if Canada decided not to take the current NAFTA deal the way it is, the dollar Canadian could be trading back up at like 133, 135. But in order for it to really, plow higher towards, the 140 level, it would have to be a definitive, like, it ain't happening. And there's, we're talking in, sometime next year. So, but I am long the dollar Canadian for a lot of reasons. And I told you guys yesterday, and I'm not, I'm sticking to my plan here. And really, as long as the dollar Canadian remains over this 200-day moving average, which comes in around 128.60, I don't fear being long the dollar Canadian. It's, holding above this, multi-year trend line, broken trend line. And, I'm thinking that we can move back up to 131, 132 at minimum. Thank you. I think, and that's why the risk reward is here, and that, and I can put together the story, like I can visualize the story on why I'm long. Now, I do want to talk about something really quick as far as the euro goes. I actually just shorted the euro at 1789, and I closed it at 77. I just, scalped it short for like 11 pips or 12 pips or whatever. I sold the spike. I covered it down here, and I'm short some euro yen from overnight. I actually shorted the euro yen at 66 overnight. Closed it at on this. This is a 5-minute chart, so I actually closed it at 40 in Asian trade when I was watching Monday Night Football, which, by the way, was a great game. I don't know if you got a chance to watch today. It's a shootout, man. It was a shootout. Anyway, I closed it at 42, half of it, and then I'm still in another half of my position. So I have enough euro short exposure, just being short the little euro yen I am. So I didn't want to be short euro dollar and euro yen at the same time. And by the way, I'm short euro yen. The reason why is because we have a 618 retracement here, 161% extension here. We haven't completed the flag pattern yet, but with this confluence, you can see the confluence right here, right here. With that confluence right there, this is the 618 of that move. 161% extension of this move. I don't mind being short where we're currently at. So, but stocks are stronger, and that's keeping it elevated for now. Stocks pull back, then the euro yen will probably pull back as well. And so I'm just staying short a little position in that. But going back to the euro dollar, I guess what I was going to say earlier is, and I haven't had a chance to confirm with my office. I Skype into my office when I'm off of this webinar. So as soon as I get off this webinar, I, pipe into my office in Greenwich, and then I chat with the guys in the office at Gellis Capital. So seeing some emails and conversations, and actually Twitter as well, they're not buying this euro strength. Now, you'd said, the CFTC data still showed dollar longs, speculative longs in the market, which is true. If you look really quick, and this is our chat room. Hey guys, you guys can all say hi. These are all the files people have uploaded. Last night I uploaded this daily sentiment index. The dollar index is actually, yesterday we registered 17. So it's very bearish sentiment in the dollar index. Okay. Which is, we're getting towards extremes. You can see that I highlighted last night some of the, crude, very extreme sentiment at 86. Yen is getting very extreme. That's why I don't know if dollar yen is going to make it much above 113. But the dollar index, at 17, and you guys are on Jumbotron. Hey, Jumbotron. Okay, so that's all of us chit-chatting. There's 90.
What a great looking design.
Yeah, that we can thank Steve. See, and I can even say hello to Amanda, so I can reply and hey, Amanda. There you go. So and then I got a boatload of emojis. Like there's my muscular arm emoji. Anyway, sorry, I can get carried away with all that stuff. I'm gonna get rid of that. So what I was trying to point out here is, well, we're range bound in the euro dollar. And by the way, that community is only ForexAnalytix community. So you have to be a ForexAnalytix subscriber to be in there, which that's where I'm at all day long. Paulie's there, Amanda's there, Steve, Stelios are there. Grega pops in every once in a while. Andre actually pops in every once in a blue moon, and Coach does once in a while. So the euro dollar is boxed in this range, and yesterday when we popped above this 118.10 level, I'm like, the risk is that we slump back to 117.20. Actually, if you read the analysis from yesterday, let's go to basic technical analysis, go to yesterday. Euro dollar back at the 79 level, follow hawkish comments from Draghi about pickup of inflation. This is the 161 extension again. Another day, another failure at the weekly. Oh, this, I guess we talked about it in intraday. Another failure at the weekly 38% retracement at the 117.9 level, which is now becoming a big risk for the bulls, but a move back below 117.20 level would confirm topside failure. Obviously, we are just bouncing around, in it now. Yesterday, I was telling people intraday, I'm like, okay, you can't be long up here now because of that failure. You can't be long. It's probably going to come right back down to 117.50. We came right back down to 117.50 and lower. Now, with the euro dollar, we're obviously boxed in. And I was what I was gonna mention to you is, I haven't talked to the guys in my office yet, but they seem that they're not very bullish. They're not very bullish the euro, and a lot of it is because all of Wall Street, all the analysts, and I can agree with that because I've read a lot of reports, even this morning, technical reports on everybody's expecting a stronger euro from here, and they are taking, I think, more of a contrarian view. And even though I'm not bearish the euro yet, not until or if we get below 117.20, we have to get below the bottom of this, basically this trend line here, which not going to happen until tomorrow, I don't think. But if we drop below that trend line, I will, without hesitation, short the euro dollar, because I know the entire market is bullish the euro. I know the market is. Everybody's pushing for a higher euro dollar, and I'm not a believer. Now, I'm not necessarily going to fade the euro. I did this morning, and by the way, we don't have any data coming out in 2 minutes, just to let you guys know. So I'm not in a hurry to finish talking. I'll let Steve and Stelios take over here in a couple minutes, but I'm not necessarily fading the euro to stay short. I'm just playing this range. Like if we got down to 117.30, 117.40 today, I'd probably buy it. I don't, and when we were up here at 117.90, I shorted it at 89. I don't care about playing the intraday range, which I will do today. But going into tomorrow, post FOMC, I will not hesitate shorting it if it shows that type of reaction. If we see a move down here, I won't hesitate shorting it. At the same time, I don't mind buying it either. I think we can very easily get up to 118.50, and 118.50 is just the upper end of this this trading range here, which would be the 38% retracement on the dollar index too, just so you guys know. So I don't mind playing it to 118.50. I'd rather play it below 117.20. On the short side, but I'll have to let price action dictate that tomorrow. It's not a decision I'm going to make right at this moment in time, and it's not something that I can say with certainty to myself that I feel that the euro is going to break down, or I feel it's going to break out to the upside. I really am. I'm pretty indifferent right now, and that's why I'm just kind of trading this range for now. And I think you have to be cognizant that this is your range. You know, selling it up here at 118 and buying it down at 117.20 seems like the logical trades at the moment. You know, as if you're in the middle of the range, then you're just, you know, you're just flipping a coin. It's a bit of a crapshoot. So, and until we, you know, get in and out of there. Wait. Oi Toy says, I'm short the US dollar Canadian here. You're trading like a broken gate. Pick a side. You're making your listeners lose money. What are you talking about? Did you hear that? Did you hear that, Coach?
Yeah, I did. I did.
What are you talking about? No, you got to trade the range. It's a range. It's clearly a range. And so
I want my money back. I don't know what you're talking about.
He goes long, short. I'm long the dollar Canadian. I've been long the dollar Canadian since Friday and doing well, by the way. And everybody actually that listened to this webinar on Friday knew that I was long the dollar Canadian. So, but intraday on the euro, you got to trade the range. Either that, or you can try to pick a side and think you can be smarter than the market, but the market's gonna.
Anyway, you can't please all the people all the time, and I dismissed him. So you know, in our room, there's respect for everybody, including our members, and that's our only rule. It's not a hard rule to follow, but we don't let our environment get polluted. So he's out of here.
Thanks, Dale. All right. Well, guys, I hope you I'm going to actually go pipe into my office right now and go probably end up rearranging my sock drawer today, because it might be one of those kind of days ahead of the FOMC.
Hey, Blake, one day I hope to be as lousy of a trader as you.
Yeah, I'm trying. I'm trying.
Yeah, I hope. Or Steve Bulgy or Greg Horvat or Amanda or anyway. The guy pissed me off. All right, so Stevie, how are you, buddy?
Guys?
All right, good luck today, Blake.
Bye, Blake. See you later, mate. Bye. Hey, Dave.
Steve.
Are you feeling better today?
Yeah, I'm 50%. I'm halfway back, man. I'm at the 50% retrace level, but there was a confirmed high, so I'm looking for new highs here. So, how about yourself, buddy?
I'm good.
So, were you surprised that people were buying the FANGs as a flight to quality? A flight to safety is what I heard on CNBC. That's why they really said that, Steve. That people were buying FANG stocks that was a flight to safety yesterday.
Something tells me that we will be, recalling this day at some point in the not so distant future.
Yeah, I don't think they know about TED spreads and T-bills and things like that. But anyway, it's one of the most ridiculous things I've heard in a long time.
The market, the market is distorted in such an extent that a lot of people that have been in the market like for 10 years and haven't done the due diligence in at least studying, what preceded what they now understand and experience as a normal market. They've completely, lost the ability to judge, what makes sense, what doesn't make sense, because a lot of things make sense in the context of what's been happening during the past few years, but that doesn't mean that it's a little bit of a matrix world kind of like the movie. It's you are in an alternate reality. Some things are happening the way they're happening, but history has taught us over and over again that this is not going to go forever, for sure. And some people just believe it's going to go on forever.
Well, maybe they're not just buying cannabis stocks. Anyway, it's great to hear you. I think Stell's with you too, so I'm just going to. Hi, Stell. How are you, buddy?
So why don't you start by telling us if there is anything on the macro perspective that makes sense to talk about?
No, you can carry on now. Seriously, there's been no real developments. I mean, apparently it looks like the Italian budget. There's been some kind of positive rumors, let's say, about the Italian budget, which is due to be finalized by Thursday. But nothing's happened since yesterday, and I think the whole market's going to be
waiting for tomorrow.
For the Fed, yeah. And like we said yesterday, the Fed's going to deliver, but what are they going to do afterwards? We're pricing 1 more for this year and 3 more, I think, roughly. I need to look at Fed fund futures again, but roughly 3 more next year, which is kind of fair given, the US growth, inflation. But I've said this before, because of all these trade wars and potentially things that might happen in the next, 6 months, year, who knows? I think the risk is for the Fed to underdeliver, because what's the other alternative, that they hike 4 times next year? Yeah, it's possible. Sorry, but it's a very small part of the possible scenarios, and I don't like betting on things that I think are a very low probability. So
first of all, I think that the basic reason for which I believe that the Fed can disappoint in the dovish side. And, I'm going to just, mention that, and then we can go to, analyzing the markets. Although I have to admit, not much has happened since yesterday. I mean, today I just had to adjust very few key levels, and that says a lot. Is the fact that still the Fed has now, in essence, guided forward, letting us know more or less that normal rates for today, for today's standards in general, have to be considered anything between 3.5%, right? So that's what we think. Yeah. Yes. So we're currently at 2%, and the market is pricing in another 1% of hikes, let's say, during the next 15 months, which would take us to the bottom of this range, which they now consider like, normalized rates. So, given that, and assuming that there is not going to be an accident in the market by then, as you very well said, best case scenario, by the end of next year, we're going to be at the bottom of what they consider to be neutral rates, right? I'm not going to go in the discussion of it makes no sense that neutral rates are 3%, and that shows how weak the economy is, etc., etc. We've had that conversation in the past, and I think that everybody understands that this is a totally different topic. But the signs are definitely there that what we consider today a strong economy is not the same that what in comparison to what we considered in the 90s or in the 80s or in the 60s is a strong economy. But regardless, so let's say everything goes as planned and we're at 3%. The absolutely only way that they can surprise on the hawkish side is, let's say, a scenario in which inflation goes out of hand, right? But even if that happens, do you believe that with the US debt being as high as it is, and the cost of servicing the debt increasing that much by even 0.25% of increase in the rates, do you really believe that the Fed would actually try to help the economy or fight inflation? Because personally, I've said that before, I very much doubted that they would actually try to fight inflation. I believe that they would be mostly focused in helping the economy not break down in such an event. So, that's my way of thinking, and that's why I also believe that, if there is even without an accident, as I said, in the financial markets, which in my opinion is a high probability scenario if we're talking about the next 12 months, or 15 months. But even if that doesn't happen, as you said, best case scenario, they're going to give us exactly what the market is pricing in, but a lot of possibilities that something is going to happen and we're going to get less than that. In which case, obviously, the risks are tilted to the downside for the dollar.
Yeah. I agree with you. And, although the Fed's and most central banks' mandate is to control inflation, you can see when, especially with the Fed, when the stock market takes a nosedive which it has, 2 or 3 times the last couple of years, they're all out on the wire straight away, right? You notice that. So it shows you
that don't worry, we're here.
Yeah, it shows you how important they consider equities to be, and the stock markets. And Donald Trump has also basically aligned himself with the indices, right? Every time they go up, he's talking about how great it is that they're all-time highs. What's going to happen when they start dropping?
Yeah, they obviously strongly believe that what's a big part of what's keeping this market going is the wealth effect. And if for some reason, this gets reversed, then the unraveling is going to be like extremely fast and extremely vicious. So that's why every time, as you said, the market seems to be at risk, indirectly or directly, explicitly or implicitly, they all make sure that the market understands, don't worry, we're here, we'll help if needed. But, this will keep working until it stops working. And when it stops working, things are not going to be easy, because I really have no idea what can support that market afterwards. Speaking of which, we can start with by having a look at the indices, since we're talking about that. The S&P is still trading. Yesterday, actually, it at the lows of the day tested this previous high that we had in the end of August. It held so far. As I was mentioning yesterday, I'm still short half a position. As I was mentioning yesterday, to be honest, I have no indication that this is anything else than a corrective move lower. I mean, I don't see any real momentum. I might actually book, those few handles of profit I have, because, unless we keep on moving lower today, because I really don't see the market being ready to roll over yet. Now, NASDAQ obviously remains somewhat weaker than the rest of the markets, but that doesn't change the fact that we're not that far away from the all-time high here as well. Dow Jones, the only thing I want to stress out here is, under normal circumstances, the fact that we actually, the day before yesterday, we actually pushed through the all-time high, and we closed actually at an all-time high. And yesterday we actually reversed that, and we came back below, the previous high, and actually marked an evening star formation on the daily chart. Under normal circumstances, that would be quite a strong reversal signal. But given how the stock markets have been, I would want a lot more confirmation than that. Regardless, quite a nasty reversal after. Obviously getting some people trapped on the long side there. I would want to see some. Can say more about that. Now, having to do with the DAX actually stalled now. It's the third day that we're stalling in that area of resistance. I also wrote that during the weekend. That doesn't mean that we cannot punch through that area of resistance, but that means that at least we know that this area is still working as a support resistance area. To be honest, unless we see some move lower, this is going to be looking a lot more like a short-term consolidation, in which case I'm going to be looking, once we bridge above that, I'm going to be looking towards 12,600. 12,677 is a 61.8. So anywhere between there, the 200 DMA is also a little bit above 12,600. I think that's the next natural area of resistance. So if we actually, close above 12,400, I think our next target is there. But, the DAX needs to do more to prove that it's actually resuming to the upside. Until then, it's more or less of a chop fest. The FTSE is actually trying to bridge to that equivalent level today, that previous here. So I'm monitoring this level. If we actually close above it, the chances of more bullish price action increase. And for me, this descending trend line resistance here is key for the trend. If we actually manage to break above it, I do think that the FTSE is going to extend quite a lot higher. Until that happens, we can't be certain that this move lower is complete. So far, the recovery has been quite sharp, though, and this is something I'm taking into account. I bet it trapped a lot of people being short here or keeping the short positions, because as I said, I was also fooled here. This, price action that we had several days of consolidation and indecision candles like spinning tops and dojis. This clearly pointed to some kind of a consolidation that's going to break in the direction of the previous move, which was lower. So I expected the move lower, and then we got an acceleration higher, and this looks more like a V-shaped recovery now. So I want to see what's going to happen from this level, the 7.5 thousand area. I think it's quite an important support resistance area. So if we clear above it, the chances that the move lower is done increase substantially. Next area of resistance, by the way, is at 7,600. So that has to do with my view on the FTSE. Not much has changed. Stelio, I remember I sent you that chart as well on Skype, because I know that your friend was asking here, and I showed it. As you see, the Shanghai Composite Index actually, did make the big move above this descending wedge. And that's quite a bullish development. We're currently testing an area in which we got rejected a couple of times previously. I think this is actually, something, I wasn't paying attention to that. I was looking at the FXI, but then Stelios, told me that a friend of his is monitoring the Shanghai Composite Index, and we were down here. So, I then had a look at it, and they said, listen, it's currently on very, very strong area of support. Let me zoom out so you can see it. There it is. As you see, this has been a very important area of support. Yeah, so I said that, listen, the only bullish thing about this is the potential of actually finding a bottom here and playing out a descending wedge potential. As you see, there was also, you could call that a 3-drive, coach, right?
Yeah, or an ending diagonal, maybe, if you're an
Yeah, just look at this RSI divergence. I mean, the first RSI reading down here was a lot in very oversold territory. It was even below 20, roughly at 18, 19. Then we got the next low, which the momentum was obviously already stalling, and the next RSI low was above 30, and the next one was even higher than that. So it started looking like looking like a great proposition here. And we got the breakout, we got one day of consolidation. I like the fact that then we saw a very, very big candle higher. And, no wonder we're seeing a little bit of a consolidation now, after a huge candle. But I do think that if we clear this 2.8K area of resistance, I think that the next target is definitely the high of the wedge here, which is above 2,900. So bottom line, I think that, Chinese stocks seem to be rebounding in a healthy manner. And, exactly as copper, it fooled people because it looked like both of them would break down at that night that Trump actually announced, the extension of tariffs. And, instead of actually breaking down, which was the common sense of what would happen, they did the exact opposite. They broke out from the equivalent formations. And I bet they got a lot of people scratching their heads. And usually when you start a move by people being, really troubled and wrong-footed, usually this is a good recipe to see a much larger move than you initially expected. So, I have to admit that this looks interesting and, has more upside potential, I believe. So let's have a look at the FXI as well, since we're speaking about that. FXI definitely not as clean, of a move as the Shanghai Composite Index. I mean, this is the China Large Cap ETF. As you see, this looks more like an expanding triangle. So I don't think that, I mean, we did have RSI divergence. That thing was clear, and we almost made it to the ideal target, which was down at 39.53. We actually made it to 39, roughly 83. So very, very close to the target. And we've seen a decent recovery, but is it out of the woods yet? Has it really turned bullish from a technical perspective? No, not yet actually. So I think the Shanghai Composite is a much better proxy to play some risk on in China if that's what you're looking to do. Now let's return back to our Forex. I don't think that Blake mentioned it, so I'm gonna mention it today briefly because yesterday he talked about them, so I didn't want to go over them again. But let me say that it's quite important that the Aussie actually got rejected from this confluence of resistances here, and as long as it fails to clear above this area, I can't possibly advocate that somebody should be long. So, it's quite clear, in my opinion, 73 to 73.30 is the key area. I think that if we make it above that, we can easily extend to the 75-cent area. But, unless we do that, respect the possibility of more downside. Okay. And more or less the same deal applies with the Kiwi. Kiwi found support at a very nice confluence of supports. I mean, more than 3 supports were actually gathered in a very, very tight area of 20, 30 pips. We got a nice rebound from there. But, unless we clear this 67.20 area to the upside, I find no reason of actually, trying to belong, especially near resistance. So I'm not saying that it can't do that. Actually, I think that, sooner or later, both of those pairs should see like a bigger rebound. Because the downside momentum has clearly been stalling for some time now, and this is something that you can easily notice just by having a fast look at the daily chart. But that doesn't mean that it's going to happen right here, right now, right? So, say 67.20 is the area we need to clear. If we do that, I believe that 68.70 is going to be printing quite fast after that. I do believe that a lot of stop losses have to be above this level. And I do believe a lot of people are going to be monitoring this area. People that have been short are going to be saying, once we rebound over that, okay, I've had a good run, but probably there's a bigger rebound happening here, so it's time for me to collect some profits. Other people are going to be getting stopped in short positions that they were late in the game. So those are enough to fuel some more upside after we clear that area. So I really, I would really advise somebody not to be short once we clear that area. There should be at least some decent follow through. Now, having to do with the Aussie Kiwi, I have to say that this is quite an important barometer for me, because there are a lot of pairs that you might want to trade. Like you might want to trade some of the Euro crosses, like Euro Aussie, Euro Kiwi, some pound crosses like pound Aussie, pound Kiwi, Aussie yen, Kiwi yen, Aussie USD, Kiwi USD. So the question always is, okay, if you want to be long, which is the better one to be long? If you want to be short, which is the better one to be short? And obviously Aussie Kiwi is going to tell us. Is going to give us the answer for that. And, I do see the potential that there is more downside coming here. I saw quite a strong move lower, and this looks like a consolidation, but we're still struggling and holding more or less this ascending channel. So I have to say that as long as we're holding, I have to remain neutral. But if we do clear this trend line cleanly, and especially if we do clear above the 1084 area, then I would definitely be looking for a period that the Kiwi is going to be overperforming the Aussie. And, I have to take that into account for, as I said, for selecting, which of the two instruments I want to choose to be long or short against other currencies. I very rarely, and it's been a long time, trade, the Aussie Kiwi itself, because I hate the fact that, it can spend big periods of time doing nothing. But, as I said, I always look at it to know what I'm going to do with the others. Now, having to do with metals, gold, nothing to add here, still consolidating. I still believe there is potential for more upside before resuming lower, but, it has to prove that it can actually do that. Silver, only if we clear this 1430, 1440 area, there's something to talk about. Until that happens, there's really nothing to talk about. Palladium, I do see the first signs that actually palladium is losing upside momentum. It makes sense. I mean, the daily RSI is now above 90. And if I go down to the 4-hour chart, you're going to see that, perhaps we're also trying to form here some kind of an ascending wedge, right? So perhaps there's a little bit more upside left, but I would be looking for a pullback afterwards. I do think that a pullback should be considered, a buying opportunity. First area of support, I think, should be considered that previous high there at 1,027, let's call it. And in my opinion, a retest of the 1,000 area is going to be more or less, a gift. I don't know if it can make it back to that level, but, it's going to be a great level to be buying the metal. I think that the move higher is more or less impulsive, and the corrective move lower, if you zoom out and look at the big picture, does look corrective in nature as well. So I think being long is a much, much better proposition than being short. Now, let's have a look at a few of the Coach, do we have an interview today, by the way?
Yes, Steve.
Who do we have today?
Vladimir Mikuratumov.
Okay. Vladimir Putin, I said.
To me, I'm going to be calling him Vladdy because that's what he has on his Twitter handle. But I'm looking forward to it. It's going to be, every once in a while, and I've learned this on Twitter, that it's not the most followed or famous guys that are always the best traders out there. There are many people that, have less than 1,000 followers that don't need followers because they're successful traders. So,
first of all, everybody began by having 0 followers anyhow, right? There is no magic way. I mean, unless you're like, somebody extremely famous already. So the moment you join Twitter, there's going to be a huge following coming your way. Everybody else, needs to take some time to prove their worth and gain followers, the slow way. So, that doesn't say much, as you said. I agree with you.
Yeah, I mean, in Chicago, I had followers, but they were usually people trying to, roll me and take my wallet. So anyway, they saw maybe I had a little too much to drink. I'd be an easy target. But yeah, looking forward to talking to Vladdy. And anytime you're ready to wrap, just let me know.
Absolutely. I'm going to have a look at the euro yen and the pound yen, which we didn't see yesterday, and then it's all yours. Okay, so euro yen seems to be, or at least attempting for a third consecutive day to clear the 61.8. I'm not 100% sure it's going to do. I mean, it looked like it would do that, yesterday and the day before yesterday. Both of those days, it actually failed and ended up closing below. So let's, first wait and see a daily close above it. But if that happens, I would be looking, as you see, I already have a target of 133.80. Why? That's a quality target of the first leg higher, with the second leg higher after this pennant took place. So, that's the area I would be looking for. If you remember, we drew that a long time ago when we were here. I said that, listen, this looks like there should be a little bit more weakness coming and one more leg higher, at least, that, could get us back to the 131.50 area, or even the 61.8 at 132.60. So to be honest, if we clear this area, it's already going to be more of a recovery than I initially expected. But, as I said, 133.80 is the next target I would be looking for. And I would really not want to see the pair higher. If I do, I'm going to be a lot more neutral than I am, because I still maintain, a soft bearish thesis. But as I said, it's a soft one. I mean, I'm not like that much convinced about it. But if I had to have an opinion, it would be that it can still fail and resume lower. More or less the same deal here with the pound yen. Pound yen had a massive reversal day on Friday. I mean, this was a key reversal, and those are, very, very strong bearish candles. I mean, they have a high probability of actually pointing to a reversal accurately. So, we're still within that candle. We're recovering within that candle. I especially for the pound yen, I would have to respect the possibility of more downside unless we clear the upside, that daily close that we had on Thursday, that 149.20. So, pound yen looks even better to me to the downside. You can see here why as well. If I zoom out, we broke below quite a big corrective, in my opinion, pattern. So, my thesis is bearish as long as we stay below this broken trend line support. We've already tested it a couple of times as a resistance, and the pair failed. So, let's see what happens from here. I don't want to see higher prices than the high that we had on Thursday, or, at the very least, the high that we had on Friday before we got that key reversal. So thank you very much, Dale.
You're welcome, Steve.
Enjoy the interview. We'll be back here tomorrow.
Okay. Okay. Good hunting, and you guys can catch Steve in the members chat with Blake, and I'm sure that Stella will be back, and I may drop in today. Anyway, I'd like to move ahead. Vlad, how are you, buddy? I'm really looking forward to this interview, getting to meet you and talk to you about our passion, which is the market. So I just passed you the controls, just waiting to see your screen. There's a screen share option and hear your voice.
Okay. Dale, can you hear me?
Can hear you loud and clear, Vladdy. How are you today, buddy?
Amazing. Great. I've actually been looking forward for this. It's my first interview, and I just find it as, I use Twitter to pretty much document my journey. And it's sort of my outsource, and that's how you found me. Yeah. And so I just, I'm new to the trading space relatively.
Okay.
So I just, I'm just using Twitter to connect with other people who are also interested in trading.
It's a great tool, and like I said, I love to lift people up that don't have 50,000 followers, and I went to your website, and I was wondering how you came up with your handle at Be Independent BB, and I had to go to your website to find out that what you mean by BB is bit by bit. And you know what? That is solid survival advice for people coming into the business. Let me ask you this, though. Did you learn to go bit by bit by biting off more than you could chew, like a lot of people?
Actually, my history with risk management goes a bit of a longer way. I played poker for a long time. Okay. And there I got burned a lot. So the concept of risk management was not new to me in any way, because I've already experienced it in poker.
Okay. I mean, everything's a bet. There are a lot of analogies with poker players. A lot of good poker players also are very good traders. Have you noticed that? Because that one reason?
Yeah, that's definitely risk management. Risk management is, I would say, one of the main reasons.
Okay, so how long? Tell us what you were doing before you got. Well, were you playing poker to support yourself, or did you have another profession before you got into trading?
So I'm an aerospace student. I'm a bachelor. I'm going to finish my bachelor course. And the way I got into this initially was that last year I had a pretty easy semester, and I just wanted to make my time useful. And so I heard about this crypto saying, you know, like reading headlines like Bitcoin at 3,000, Bitcoin at 4,000. And I was like, damn, like this is just not stopping. But obviously I knew that, you know, like getting into a space like that is not easy. Like everyone wants to win, right? So then it becomes competitive. So you just can't be naive and just go in, yeah, this is going to be easy. I'm going to win right away. So that was my mindset. And for about 4 months, I just literally, I read what Bitcoin was, the concept, got behind it, obviously, if I'm still in this.
Okay.
Yeah, and then I looked at charts. That was I had 4 months where I just played with charts, played with the Fibonacci tool. It's still one of my best tools to date. It's one of my favorite ones.
Okay, because I don't see any fibs on your chart. I was going to ask you,
No.
in the technical world, was there anyone or a mentor or somebody that was a positive influence on you picking up these skills to be able to recognize patterns and entries, exits, how to measure objectives, etc.? Did you have a mentor?
Yeah, for sure. I still sort of do, although I did this on my own mostly.
Yes.
But I did. It was the market sniper, Francis Hunt. I'm not sure if you've heard of him.
Okay. I know that Twitter handle, Market Sniper. I
correct,
think isn't he from Australia? Is that correct too?
I believe he's from South Africa.
Oh, okay.
So that's where he was born.
Okay.
But
so what did you learn from him that you're still using in your work today?
His methods, all these lines you see, actually. And like,
okay. So is the HFV method you learned from him?
HVF, yeah, correct. Yeah, that's
okay.
That's
okay. I'm dyslexic. I wrote HFV, but it's HVF. Right? Okay.
HVF, yeah. I think it stands for Hunt Volatility Funnel. Yeah, that's exactly it. Yeah.
Okay. All right. So, and crypto is all you trade?
It's my main one. However, because I'm not a range trader, I'm a breakout trader, and we mostly trade continuation patterns.
Okay.
Crypto has been quite sideways, so I would say range traders have been doing a living off these past few months, but it's just been dull for myself.
Okay. Until Ripple came out of the hole.
I didn't catch the Ripple move, unfortunately.
Well, maybe it just started, and this is a pullback to buy. Is that what you're thinking?
Not really. I would actually would like to. I mean, we can zoom in the chart. Let's do it.
Okay.
Actually, I have here a better example to demonstrate what the HVF method looks like.
Okay.
For upside on the Euro ruble. So perhaps going back to something more home to you. Yeah.
Are you originally? Well, I never really traded the ruble. Are you originally from Russia?
Yeah, correct. Yeah, I was born there.
But you live in California now?
I live in the Netherlands.
Okay, that's right. Because you have a complete American type accent. There's no Russian accent.
I've had my international experiences through life, and my studies in English as well. So I'm quite comfortable.
All right. So even when you choose a currency instrument, you choose a pretty volatile one. So because we know the ruble has some huge moves. Nothing like the Turkish lira had, but definitely one of the emerging market currencies that was having some problems for a while. So go ahead. I see the different colored lines. Is that part of the
that's
method? Okay.
That's all part of it. So I think, the best way to teach is by example, right? So we're just going to remove everything that we see here.
Okay.
Pardon. Okay. Yeah, we got it. So pretty much what we're looking for in the chart initially is a reduction in volatility. So some people would just look at this and say, okay, if I draw something like this, right? There's sort of some symmetrical triangle in there. Potentially, obviously it's debatable, but that's sort of the volatility squeeze into in there. I think we can agree on that.
Yes.
So in the HVF method, what you're looking for is 3 alternating highs and lows. And the thing is that we have things that make our second high and our third high points valid. So the way we would look at this, so this is clearly an uptrend, and then we have our first exhaustive high here.
Okay.
And then this is the first sell-off low, quite strong, right?
Right.
And then in order to have a valid second high point, you're looking for the second impulse to be between the 0.5 and the 0.886 fib. So
Okay,
that makes it, yeah, that's what it's called, what makes a valid second high point. So
okay, so the second high point is a lower high, always?
Correct. Yeah, yeah. So there's definitely a squeeze in there. You're looking for a squeeze.
Got it.
So then we can start. And obviously then your second low point needs to be higher than your first low point.
Okay.
So then having that in mind, we can already draw.
So now you're looking for your third exhaustive high.
Correct. So for that, we use the fib tool again. And
let me ask you this. Do you know why the sniper chose the number 3 to have 3, points of highs and lows for the method? Because I mean, I'm big on the number 3. It's a number of completion. I do a lot of 3 drive work, etc. So, do you know why he selected 3? Is it because it's a powerful number?
I'm not sure. I guess that makes some sense. The thing is, sometimes you get a squeeze within a squeeze. We can see that. We're going to see that on the Ethereum chart.
Oh, we're like on the third one, you'll have a fractal that there'll be 3 within the third.
Yeah. You see that?
Okay.
It still amazes me sometimes to this day.
Yeah.
And obviously, you need to be in front of the chart to catch that point precisely.
Right.
But sometimes, so that's why sniper. That's why he calls himself the market sniper, which is that exact moment where that the bigger risk reward is provided by the market. So in the HVF method, what you're actually looking at is to maximize your risk reward ratio.
Okay. All right. Interesting. All right. So in this example, you're waiting for the third high, and then you'd be waiting for the third low before you would take action. So what would be the trigger if we could just imagine having another higher low here?
So the thing is, usually a valid third high is above the 0.5 fib, but you can also have these. It's called like an early entry if you see a lot of confluence with the 382 fib, which is actually something that you see here. And if you actually use it as a resistance line, you can actually see the squeeze sort of going on here as well as an ascending triangle potentially, right? So there's some bullish bias. You could say that there's some bullish bias to it.
Right.
I'm not sure if you agree, but at least in my mind.
Yeah, higher lows, higher highs.
Correct, yeah. So then, in this case, this would become our third high. I like to mark it as green because this is where your stop buy order will be located. This is where you leave your pending order at that level. And then, if the computer allows me to. So
you're going to be stopping yourself into longs or getting short and stopping yourself out of shorts above that green line.
So this is my entry point above that green line.
All right, you're buying a breakout. You're buying a breakout.
Yeah.
Okay. Yeah. All right.
So that's what the HVF method is about. It's mostly about trading breakouts, and that's what I said. That's why I said that I haven't been actually trading a lot of cryptos because there's a lot of range trading involved, and I'm just not comfortable.
What about money management after a breakout? Do you believe in taking partial profits to take something off the table and get paid? And when would you move your stop to say break even or profit? How do you do that in your trading
I
personally?
actually don't do that personally. I know people that they aren't comfortable with just, getting. We're gonna get to this point, but so the market gets along. I don't know. Let's say to the top, right? Somewhere
Right.
here.
So
And
you have the patience to ride sit with trades until targets.
yeah, because
That's
I trust
great.
the method.
You know that's a great quality to have, because most don't. So congratulations on that, to have the patience to do it. Most people start seeing the money fly, up, down. They want to capture something. I'm actually a proponent of taking something off the table and keeping something on for targets, because sometimes you have more than one entry where you you took something off the table, and then you believe in the trade and you get another entry, then your risk is profits rather than principal. So just money management stuff.
Yeah,
But if whatever, if it's working, whatever is working for you, don't fix it, buddy.
I'm just, I'm new to the market still. So like, although I've spent a lot of time on the chart, I'm, especially now that I'm very familiar with the method, with the HUF method, I'm actually maybe looking to broaden my knowledge, because there's a lot of it out there, right? There's just not time for everything.
There's a 1,000 ways to skin a cat, buddy.
Yeah,
So
exactly.
So what do you usually have on your watch list? I've told people that sometimes people that are new try to cover too many instruments, and someone once told me, if you can't remember the last price of what you trade, you're trading too many things. What do you think?
That's a fair point. I do trade a lot of I follow a lot of instruments. We can go into my watch list. So there's a bit of everything. There's a bit of crypto, and I've recently, because of the crypto sideways, I'm also following stocks, and I'm also following Forex, like we've just covered. So yeah, that I would get behind that. Perhaps there's a lot out there, but the thing is, I don't see the perfect pattern very often. So the idea behind watching a lot of charts is just to have, it's just a game of numbers, right? To get the perfect pattern you're looking for. So I guess that's what I'm looking at.
It's a great reason. Let me ask you this: I interviewed a gentleman the other day, and before the move in Ripple happened, he said he saw fresh fiat coming out of Korea and Japan. So do you follow any kind of like money flow things in crypto?
No. I only trust the chart. Maybe I should get some data behind me, but the chart is what I follow. I trust the chart. If it's telling me that it's likely to go up or down, like we see on Ethereum, actually,
and is a 4-hour time frame your preferred time frame for trading?
Yeah, it's really good. It's somewhere between two, because I see a lot of patterns failing on low time frames, and then obviously as you zoom out, the idea is it's like an aging wine, right? So the longer it takes you. Let's go back to the Euro ruble, for example. So this is from 2015. So my confidence, exactly. So my confidence that this is actually going to reach target, which by the way we didn't cover, but it's from the geometry of the pattern itself. Then you project it from the midway line, which is exactly in the middle between so this is our entry point, right?
Right.
And this is our stop loss. And then, like you saw, the take profit is actually already in the geometry of the pattern itself, and that's your take profit level.
Is that like a harmonic pattern? The geometry? Would you consider it harmonic?
I don't know. There's just like I said, I played around with the Fibonacci tool, and I was just amazed by how often the price respected those levels. and there's something in the geometry of the already existing pattern that could potentially,
the creator was a mathematician.
Yeah, for sure.
Everything
for sure.
has laws of nature that things you wouldn't think would respect it do. So great discovery too. So you know what? For someone who hasn't been doing this that long, I notice you have a community on your website. So do you have a bunch? Do you believe in masterminding with other traders? And because we only have two eyes.
Oh yeah, for sure. Although I do put a lot of work in because I'm the creator of the group.
Okay.
In the beginning, I actually have a free private group where we share all the setups we see. So if anyone is willing, like, you can just DM me on Twitter. I do like a bit of a process to see if the person fits or not. I just don't want to let everyone in.
Yeah, you bet them.
Yeah, exactly. Although it's free, it doesn't mean that it's anyone that can enter or can do it. There has to be some trust between us, and that.
So do you do everything for free? I also noticed that you have ebooks on this course. Now would probably be a pretty good time to go to your website, Vladi, and show people where they could find you and what you offer. God, I hate that word noob. I hate that word newbie.
Fair enough. Yeah. I've had that.
Newbie, new. Oh, newbie.
Actually, yeah.
It should be doobie do. But anyway, how about aspiring trader? I don't know. I think newbie's demeaning, but that's just me. I'm a
the thing is, where I started with this website, I was full on crypto.
Yeah.
And my idea was the thing is, because crypto is a new space, a lot of people focus, at least that's what I see, a lot of people focus on the fundamental analysis. So they don't actually know how to look at a chart. And so my idea was to just completely, that's wrong in my opinion. Because first of all, most of the people in the space are first-time investors. So they don't quite know what they're doing, right, initially. And I don't know, I just completely digressed from that idea. And
Vladi, I've interviewed well over 1,000 traders in the last several years, and the average answer for how long it takes a trader to make a breakthrough, to be consistent and pull money out of the market, to be able to quote unquote trade for a living, is about 4 years. So it's just something to keep in mind. I'm sure people do it quicker, but I'd like to ask you, how do you tell people to do it bit by bit? A lot of people go out and they're live trading with too much leverage right away. In crypto, is there a way for people to trade very, very, very minimal size or a demo account to see, before they go live and put big money on the line for them to? Do you think they should do that for a while? Trade a demo, keep a journal. Do you keep a journal?
Yeah, for sure. Definitely keep a journal, especially in the beginning. Like, I haven't done it as often as I should. I do have that, but in the beginning,
For your next interview, I want you to bring a note from your mom that you've been a little lax, slacking on your journal. But anyway, so go ahead, just give us a rundown of your website and everything's free. You're saying everything's free, the course, being part of the community, and your mentoring.
Yeah, let's guide you through it. So the newbie part is actually not related to trading. It's actually for people that they've heard of cryptocurrency, but they're not sure of what it is about. And when I did this, it was November, December, so the hype was still around. And that was exactly what I didn't want people to think about the space. So this is literally my first sentence. Like, look, this is not going to be as easy as people make it sound. And so what is it about? How does it work? I go over Bitcoin, Ethereum, and Ripple. the different concepts, ask some pertinent questions. Also put in how you can make your crypto safe, of course, because everything's online, and there should be some thought put into it as well.
So you could guide me when I want to buy some crypto with a wallet that's not made out of leather.
Yeah, sure, I can do that.
All right, buddy. Thank you.
Yeah, sure.
I'm an old guy, you know. I mean, yeah.
I mean, if everything.
Vladdy, on my desk, I have one of those ticker tapes under glass, and that's what I trade with. You remember those? I know you weren't around, but you remember seeing them in a movie?
Yeah.
But like a ticker tape under glass? Okay, I'm just kidding. But,
can I just Google that?
Yeah, go ahead. Yeah, I think everyone should be a tape reader. So, okay. So
yeah, let's just wait. But then I have also the trading part. So if you've never looked at the chart before, literally, and the reason why I do this is because the crypto community gave me everything. So I gathered a lot of knowledge from different people, and everything was for free because the idea behind crypto is that everything's open source. Like the Bitcoin code, a random person could come in. Obviously, as long as your idea is good and you're confident on what you're doing, you should rise. People eventually will see that you're good, and you could actually, participate in Bitcoin code. And that's the idea. The code is open. Have you heard of GitHub?
Of what?
GitHub.
No.
So it's pretty much a platform for developers, and where the code is actually shared, and that's where you can find the Bitcoin code. You can just go out there and look for yourself. Obviously, probably you won't understand much of it, but it's open for everyone.
This is like the democratization of everything, especially money. Is that a decent definition of what it is, this new paradigm?
I don't know, because I've been more behind Bitcoin, the concept, than obviously, because when you enter it, it's a new paradigm. This is going to revolutionize the world. We're going to, whatever, screw the banks, we the people own the money.
It becomes a lifestyle, doesn't it?
Yeah, some people, yeah. Not in my case, not in my particular case, but there's definitely that people that it's just in the beginning there's a lot of knowledge that gets, at least in my personal view, you have to ask yourself a lot of questions. For example, how is money made? And most people actually don't know where money comes from. And you use it every day. So that initially, just for itself, is it's a big problem in my opinion. Maybe not a problem, but I would like more people to know about it, how it's actually created. For example,
so you're paying it forward is basically what you're saying, and that's why everything's free.
Yeah, because everything I know was brought in to me for free.
Okay.
So
All right. So your community, what do you have? A chat room? How do you and your community communicate? And is it during market hours and etc.?
So we have. So if you want to join the group, just go to my Twitter and handle and send me a message. That's the easiest way to reach me generally.
Okay.
And actually, in the beginning, to find the people that traded with the HVF method, what I did was checking charts on TradingView that had the name HVF. So literally what I did was reach out to every one of those individuals that had put out charts with the HVF handle on it. And I just told them, if you want to join, like the goal is to create a community with it. So all that process was done through Twitter, and the platform we use is WhatsApp.
Okay.
It's just,
Can I see what that looks like? What's up?
Sure. If you give me a sec.
Is it just you just text to each other and show screenshots, or can you talk to people too? Is there an audio function?
Yeah, there's an audio version too.
Oh, okay.
Give me a sec.
I know most of you guys don't, from your generation, don't like to talk. You mainly like to text. Am I right?
Yeah. Although talking is also nice when you're, for example, driving, or for me, I live in the Netherlands, so I drive the bike. When I'm driving on my bike, and rather than texting, that's quite challenging. So this is a bit of private stuff, but whatever. So this is my WhatsApp, and literally what I have is 6 people on here. I've posted the status for the week, like you can see here: falling try, GBP, DKK. So exotics, pretty much. That's where the volatility is at, right?
Okay. Yeah.
And where it sort of runs cleaner, I would say runs. That's why crypto is great to trade, because it's so emotional, right?
Yeah.
I feel like there's a lot of people that there are like we said, they're new to the space. So,
well, let me tell you something. Let me make a forecast. You're young. You're in tune. You're taking all the right steps. You have a tremendous future in the trading business ahead of you, and I'll be rooting for you, and want to thank you so much for taking some time out of your day to tell your story and become a resource for people interested in your methodology and what you do.
Thank you very much, Bill. I mean, like I said, just everything's free. You can go to the website. The way it's done behind the scenes is through an email list. Then I send you the document. You read it. You find out about the method. Maybe try it on the chart for yourself. And I'm more than happy then to get in touch with new people. So.
Okay, so get in touch with my new trading warrior brother, Vladi, at Be Independent BB, or www.beindependentbb.com. And we're mainly doing FX. Looks like he's everywhere, and really appreciate your time. Glad to know you, and may pips rain down on you and your community during this fall trading season.
Thank you very much, Bill. Thank you for having me.
All right, buddy. Good hunting. Okay, everyone, that's it for Turnaround Tuesday. We'll see everyone tomorrow for prior to the Fed, and get you prepped for it. And remember, most of all, and this includes you too, Vladi, don't just count your pips, count your blessings. And I'll see everyone tomorrow. Adios, Warriors. Thanks again, Vladi.
Thank you.